This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Haidi Stroud-Watts. The top stories this hour. Asian stocks are set for losses after Trump's latest tariff threats, with Apple and Samsung in the firing line. The president saying that he's extending a deal deadline with the EU.
Treasury Secretary Scott Bessent tells Bloomberg more big trade deals are coming within weeks.
Also ahead, Alibaba chairman Tsai urges Asian companies to look for opportunities beyond the US amid these trade tensions.
And tariffs looming large as the ASEAN summit begins, with China's premier also attending. We'll be live in Kuala Lumpur and hear from Thailand's foreign minister.
Let's take a look at how these jitters might be passing through to markets on this Monday morning here in Asia. This is a picture when it comes to trading in Japan futures, as well as futures that are set to open into the cash trading session here in Sydney. That staggered open in just over an hour's time. We are Sydney futures looking a little bit softer at the moment. It was a sort of a to and fro week last week. We had 3 days of nice gains and a couple of days of losses. So that uncertainty still petering through, particularly with some of these fluctuations over expectations from what the RBA will do next as well. Do we get a potentially bigger move with that next meeting coming just a day before, of course, some of these deadlines on trade with China? We are seeing futures off by about 0.4% when it comes to Japan markets. We're seeing a bit of upside there, 0.8%, as we see US equity index futures also seeing a little bit of upside in this part of the Asian session as well. FTSE China futures are looking flat at the moment, and watching dollar China, of course, with a lot of these sort of oscillations still playing out when it comes to what happens to the Treasury market, broader US assets more in mind as well. At the moment, we're seeing the greenback quoted pretty mixed against most G10 peers in the early part of the Sydney trade, Paul.
Let's take a look at how US futures are shaping up. It is, of course, a holiday weekend in the US, and we did have markets finishing a little lower last week. Of particular interest is going to be what we see happen with US Steel. Of course, President Trump making some rather enigmatic remarks, which did push the stock higher. He didn't explicitly endorse a proposed $14 billion takeover by Nippon Steel of US Steel, but welcomed what he called a partnership. We're going to have bonds trading in futures bonds trading only as well due to that US public holiday. If we take a look at the oil price, we're seeing things tick up a little bit, although the downward pressures remain the same. We've got data showing that US gasoline prices are heading towards 5-year seasonal lows, also a suggestion that OPEC Plus might extend production increases into July as well as June, Heidi.
President Trump, of course, is we were watching in terms of the impact on these markets, saying that he's agreed to extend the deadline for a 50% tariff on the EU until July 9th. Trump says EU Commission President Ursula von der Leyen asked for the extension during a call. Let's bring up Bloomberg News editor Tony Chuska. So he's adding a lot more uncertainty, but perhaps also alleviating some of the pressure going into that deadline. What did we hear?
Yeah, well, Trump spoke just in the last hour or so, and that's essentially what he said. There's been this kind of merry-go-round with the EU. Last week or last Friday, I believe, it brought a very sort of dark cloud over this huge economic relationship when Trump said that tariffs would go up within a week. And now he's backed off that after a call with Ursula von der Leyen, the president of the EU Commission, who I believe called it, a good conversation, and they're kind of back to a starting point with a July 9th deadline for reaching the deal, which of course is a very fluid undertaking because there's an awful lot to do, and the U.S. has been very adamant about what it wants.
We've also heard President Trump threatening to impose tariffs on Apple and Samsung, a move to encourage smartphone manufacture back in the US. But a lot more questions than answers here. I mean, is it going to work? How long does it take to onshore production? The impact for consumers, and different parts are made in different countries. What's the approach here?
That's something that Trump didn't talk about just now. Just to note that Bloomberg and others have done an awful lot of reporting saying that it's extremely difficult to move these supply chains back to the U.S. in a manner that would allow Apple to produce these phones basically at the same price point for U.S. consumers. So Trump just wants to put this pressure, in this case, I think particularly on Tim Cook, whom he keeps citing by name, to do more, perhaps, than Apple has already promised in terms of bringing production back to the U.S. or bringing production to the U.S. So that will have to play out in the days and weeks ahead. And of course, it's not just, as you say, it's not just about Apple. It's about in the end. Last week, Trump clarified that it's really about basically at all imported mobile phones, which of course then includes manufacturers like Samsung and others. So stay tuned, watch that space. Right now, it's a very big ask of a company like Apple, which clearly does not want to do this.
On the other hand, we seem to have finally gotten something of a presidential blessing when it comes to the US Steel, Nippon Steel situation there. But there's some big promises, 70,000 jobs being added, $14 billion being added to the US economy. Do we know how this is going to work?
We don't know a lot more than we knew when Trump unexpectedly came out and announced this. He talked about it a bit again in the last hour or so, saying that it'll be a partnership with you, suggesting that it will remain, which I think is the whole point, under U.S. control, that U.S. Steel will remain under U.S. control. With a significant Japanese investment, but he really didn't clear it up. And he also said something like suggesting strongly that there's still details to be worked out. This was in response to a question by a reporter who said, well, what is the actual ownership structure going to be under this deal that you have been talking about? And Trump really didn't have a very clear answer on it, even a couple of days later now.
All right, Bloomberg News editor Tony Chuchka there. Thanks for joining us. Well, let's see how this week's trading is shaping up with fresh tariff uncertainty and key US economic metrics due as well. Bloomberg's MLive strategist Mark Cranfield joins us now. Mark, we were just unpacking some of the ongoing uncertainty around trade policy out of the US. We're also going to get the Fed's preferred inflation gauge this week as well. What are we expecting to hear there?
Well, the Fed are certainly trying to take as neutral a stance as they possibly can. We've heard most of the Fed speakers in the past couple of weeks. They've been singing pretty much from the same hymn book. They're trying to reassure investors that they're going to take their time. They don't really know exactly where the tariffs are heading. We had yet another change this morning, as you've been talking about earlier. So certainly very difficult situation for investors to weigh up, and difficult for the Fed as well. They're in a very, very tough spot. They sense that an ongoing trade war, that tariffs uncertainty is going to push up inflation for a longer period of time. So they will be watching things like PCE numbers very, very closely to see how sticky inflation is, even if it takes quite a while before it to come through very clearly. And at the same time, as investors know, the part of their job is the employment situation as well. So they also fear that because the slowdown is expected to happen in the United States, that there'll be more job losses, and they have to account for that as well. And then, of course, in the background, if the things like tariffs on Europe do come into play, in addition to those you've already got on China as well, then people will start talking about recession again as well. And that complicates the picture for the Federal Reserve even further. People will start talking about stagflation risks again, which are already apparent in Japan. And that's causing additional friction in US markets, because we've got long-end yields in Japan rising very quickly. There's a negative feedback loop back into the US market, which is already under pressure since we had the Moody's downgrade a couple of weeks ago. And so you can see that from a point of view of a portfolio manager, how do you make medium-term plans here? It's very difficult to trade beyond the next few days, let alone months, because of all the uncertainty related to what's happening with tariffs, and with central banks really finding it very tough to give a clear picture on where they're going.
So the only constant really is that there's going to be further volatility, it sounds like. Does that go for, where yields go from here, where the dollar goes from here, if there's, I guess, more prospective upside for Asian FX?
Well, certainly from a macro investor's point of view, the cleanest trade is to be short of the US dollar, because as a macro player, you're looking for where is the source of a lot of this trouble coming from. And clearly some of this is self-harm. Some of the policies that are being enacted from the United States to international investors, they clearly look like a backward step. And they will take that out on the currency. The first place that you will look for people to express that view is to sell US dollars. And we can expect a gradual decline in the dollar over time. It's going to be very hard to reinstate the premium that the US dollar had last year over many other currencies. It's no longer a question of we must be in the US dollar. People will hold dollars, but not to the same extent as they were last year. They will reduce the percentage that they hold, and it will go into currencies like the euro, the yen, and Asian currencies as well, because clearly, as China looks for more trade links away from the United States, Asia is on their doorstep, and you would expect links between China and Asian currencies to get much stronger. So you can, from the back of that, you can expect an improvement in Asian currencies as well. So that's stage one. Stage two, obviously, is the bonds as well. Treasuries clearly are going to have a higher term premium. It's something we've been discussing for some time, and investors are already demanding more yield at the long end of the curve because of what's happening, not just because the US was downgraded, but because they're planning to bring in a big tax and spending program, which is going to push up yields because in the short term, the fiscal deficit will get worse. No matter how it's cut, investors believe that initially the US government will be spending more than it was already. And that is something that the rating agencies have warned that we have been downgrading because we are concerned there's no end to this fiscal deficit in the United States. So treasuries will be under pressure, the US dollar will be under pressure. Stocks are in a slightly different situation because of the domestic demand in the US for equities is much stronger. But even so, they can't escape from the fact that the rest of the world is beginning to look a bit more attractive and money will shift away from the United States to other places.
Bloomberg's and live strategist Mark Cranfield there. Coming up on the Asia trade, we'll be taking a look at this week's BOK rate decision with Vanguard Group. The Asia Group also joining us to talk about the state of US-Japan trade talks. Plus, we'll be unpacking the impact of tariffs on Asia's tech sector with UBS. Much more ahead. This is Bloomberg. Let's take a quick look at the week ahead. On Tuesday, we'll be getting China's April industrial profit figures. Bloomberg Economics expects slower growth, reflecting the initial impact of higher US tariffs. Central banks in New Zealand and South Korea look set to cut rates later this week to support their economies as they face domestic and external challenges. Also a big week for tech earnings. Bloomberg Intelligence is anticipating a strong report from NVIDIA on Thursday, driven by the revamp of its Blackwell AI chip. Also watching the outlooks from Meituan and Xiaomi, whose investment plans will help shape sentiment around that broader tech sector in China. Let's bring in now Qian Wang, who's the Chief APAC Economist at Vanguard Group. Qian, always great to have you with us. So, of course, we've got a couple of rate decisions in this part of the world as well, but how much of this does this really come down to what the inflation picture looks like in the US, what the Fed does from here, and, of course, you know, the ever-changing scenarios when it comes to global trade?
Yeah, I think, for investors at this moment, there's just a lot of going on. Trade is actually coming back to the headline. I think, what happened last week with Europe, to a certain extent, you can think it's more of a negotiation tactic, but it does provide us as a good reminder that the trade war is not over. There's still heightened uncertainty, and the risk is definitely tilting towards, higher tariff. And I think, obviously that matters a lot for our region, right, Asia. Then I think you think about the consequences, tariff is really a stagflation shock to the US economy, higher inflation, lower growth, and that put the central bank in a very difficult situation. Now for the rest of the world, especially I think Asian, is more of a, negative demand shock. And as a result, is actually make it easier for central bank in this region, lower inflation, lower growth. So I think this is where the central bank in this region, as we just mentioned, the Bank of Korea, RBNZ, they're ready to cut the interest rate.
Yeah, so do you expect, I mean, Korea's got its own sort of more idiosyncratic domestic challenges as well, but do you expect more of these sort of protective support measures from Asian central banks?
Yeah, I think, when you look at the Asian central banks, right, number one, I would say inflation was not really a big concern from the beginning of this year, right? Inflation is already trending down, even without the, tariff external headwinds. And then when you look at the growth picture, growth actually has been holding up pretty well at the beginning of this year, but that is unsustainable, right? Because that is largely because of the front loading of the exports. Right. So to that extent, I think the actual impact from the tariff has not really shown in the hot data yet. So I would say, especially going into, second half of this year, you're going to see a lot of those front loading of exports start to fade. That's number one. And second, I would also say there is a demand shock from, coming from the U.S., right? When the U.S. consumer spend less, corporate actually start to spend less, then that's a demand shock as well. And the third thing I would also say is that given this kind of persistent uncertainty, that is going to weigh on the confidence, and that is going to make corporate more reluctant to make investment, both domestic investment and also cross-border investment in this region. So growth actually should decelerate towards, incoming quarters. So to that extent, I think central bank in this region, they actually feel, more inclined to cut interest rate. Of course, I would say, given this kind of heightened uncertainty, and as you mentioned, there's always some kind of domestic consideration and also heightened FX volatilities, I think any cut I would characterize more as a cautious cut.
Yeah, so I know that you expect we're going to see easing from both New Zealand and the Bank of Korea this week. You're certainly not alone in that, and perhaps more to come. But let's talk a little bit about China as well. We've got industrial profit numbers coming out shortly. Do you anticipate some more support for Chinese manufacturers as well?
Well, I mean, if you look at the, corporate profit, I always feel that, when you look at China, the bigger problem is not real growth, it's actually nominal growth, right? Given the persistent deflationary pressure, coming from external headwinds as well as structural headwinds. Think about housing, think about the weak fundamental for consumers. So this kind of deflationary pressure will persistently weigh on household income and corporate earning, including fiscal revenue for the government. So I think that's going to show up in the profit data. But I think you're going to see some interesting divergence there. On one hand, you're going to see the sector that is being supported by the government, like AI plus, high-end manufacturing or home appliance. They probably see sales and profit holding up well. But on the other hand, those export-oriented sectors probably going to see the pricing conditions start to trending down, and then they're going to suffer more in terms of the profit. I mean, this time when you see that the renminbi is not really depreciating, right? So to a certain extent, I would say exporters from China have to bear some of the pain from this trade war.
Qian, before we let you go, I do want to get your thoughts on Japan as well. We've got Tokyo CPI this week off the back of a hotter than expected inflation print out of Japan last week. Is the scene set here for the Bank of Japan to take a more aggressive approach?
Well, you see, Paul, I think, for Bank of Japan, I think we have a lot of confidence in the direction of the policy that is, raising interest rate, right? Gradually towards that 1.5% neutral rate. But, one thing we don't really have a high conviction is really about the path towards that. I think when you look at Japan, you're right. Inflation pressure seems to be holding up strong because most of the inflation pressure come from the domestic side and for structural reasons. So that actually should support BOJ to hike interest rate. That said, I think in BOJ's reaction function, there's definitely a big part that's about financial stability, about volatility, right? This is an economy and financial system that has been living with zero or negative interest rate for 3 decades and is actually very fragile, right? So given that, I would say BOJ will be extra cautious and be prudent. And as a result, I think their hiking process is going to be very, gradual and somewhat slow. We are expecting only about one hike this year.
All right, Qian Wang, Chief APAC Economist at Vanguard Group, thanks so much for joining us. We have more ahead on the Asia trade. This is Bloomberg.
US Treasury Secretary Scott Bessent expects several large trade deals to be announced in the coming weeks. And for more in-person talks with China, Bessent spoke with Bloomberg about the impact of revenue from tariffs and why talks with the EU are proving more difficult.
We have substantial revenue coming in now, and there is, at some point, there's an equilibrium rate, let's call it a Laffer curve, for tariffs. And I think we will reach that rate. The other thing that's happening is a lot of their tariff barriers or non-tariff trade barriers. A lot of these non-tariff trade barriers are coming down, so friction's decreasing there. And again, because we don't know where these tariff negotiations are going to end up, they won't end up being scored. But it's several $100 million a year, several $100 billion a year of revenue that will be used. For every 100 billion, that's 100 billion less of bonds that Treasury has to issue.
When you talk about uncertainty and getting more certainty because of the tax bill, some of the uncertainty, a lot of it is because of tariffs right now, because we're not exactly sure where we're going to end up. Do you have a sense when the economic community, the business community, will get better certainty on tariffs?
Well, we've done the 90-day pause. As I mentioned several times, we have 18 important trading partners. So what everyone should really focus on are those. We've done a deal with the UK. My sense is over the next couple of weeks, we're going to have several large deals announced. We have put a pause and a 90-day pause with China. I expect that we will be negotiating in person with them again. And then the president today, when we initiated the pause and the 10% are moving down from the April 2nd rate to the 10% level, was contingent on countries or trading blocs coming and negotiating in good faith. And I think the president was getting frustrated with the EU. The problem with the EU, I've said several times, they have a collective action problem. There are 27 countries. They all have different needs. The Germans, they are interested in cars, the French in agriculture. And then you have Brussels negotiating with them.
That's US Treasury Secretary Scott Bessent speaking with our colleague David Weston there. Let's take a look at how US futures are tracking. Of course, there's going to be no trade in the US on Monday due to a public holiday, but futures pushing higher. This is in response to President Trump announcing an extension to July 9 tariffs of 50% on Europe. European Union Commission President Ursula von der Leyen saying it was a good call with Trump. More ahead on the Asia trade. This is Bloomberg.
Southeast Asian leaders are about to start 2 days of talks seeking to deepen ties with China and Gulf nations and mitigate the fallout from President Trump's tariffs. Bloomberg's Avril Hong is in Kuala Lumpur and she joins us now. So Avril, give us a sense of expectations as we go into this event.
Yeah, Heidi, I mean, this is going to be, this week, the first ever ASEAN GCC China Summit taking place. And these are three fast-growing regions that are all looking to diversify in the face of uncertainties. And certainly for the likes of ASEAN, this is also potentially marking a new phase in diplomacy. But as much as it is about these major powers courting Southeast Asian countries, it's also about how these ASEAN economies can better integrate themselves into global supply chains and with each other. Indeed, this was the point that Thai Foreign Minister Marisaniampong was making when I spoke to him yesterday. Have a listen.
One country cannot, finish the whole product. we have to share the advantage in, the manufacturing. So that means we share the opportunities for supply chain.
Now, when it comes to the chips ecosystem in this part of the world, just to give you a sense of it, we have Malaysia, a major player in global semiconductors, but it still sits relatively low on the chips value chain, and it's more involved with assembly and packaging. It wants to move up the chip value chain ladder towards design and fabrication. So that is one area that we could see more discussions on. And in terms of the significance of this summit for China, note that this is coming at a time when China has been building momentum when it comes to key infrastructure projects. Li Qiang will be in the country from today until Wednesday, and this comes off his visit to Indonesia and comes also not long after the Chinese president's visit to this part of the world. So it really speaks to the focus for China for Southeast Asia. In terms of the GCC countries, this is also seen as a summit that could help it perhaps embark on new markets as a potential hedge when it comes to oil market volatility.
Yeah, and Avril, of course, Li Qiang was in Indonesia the previous weekend. What were some of the key takeaways from his time there?
Yeah, I mean, this visit by Li Qiang to Indonesia, for context, comes not long after the foreign and defense ministers of both China and Indonesia met. So this visit is seen as a way for China to really court not just Indonesia, but also the wider regional bloc ASEAN. For context, we know how China and Indonesia ties have been weighed down in recent years, given their disputed claims in the South China Sea. So that is the broader context for you there on that. But also know that when it comes to Indonesia, there's also a lot at stake because it wants a bigger slice of the pie when it comes to supplying Chinese EV makers with nickel or raw materials even, and China indeed is Indonesia's largest trading partner. So off the weekend, we heard how some of these sovereign wealth funds between China and Indonesia, there were investment pledges that were kind of ironed out, and we also saw a number of MOUs signed, including in the areas of supply chain development.
We also have French President Emmanuel Macron's visit to Vietnam. Energy is expected to be a key focus for this trip.
Yeah, Macron's visit is about another world leader visiting our neck of the woods, right? So really about shoring up alliances for the French as well as perhaps the larger EU bloc in the face of these rising uncertainties and tensions with Washington. For Macron's visit, note that after Vietnam, he goes on to Indonesia and he sort of caps the week in Singapore, where the Shangri-La dialogue will be taking place. That's, of course, the defense summit. For the Vietnam trip, we're hearing that there will be a focus on energy, transport, infrastructure, and state media already talking about how when it comes to Vietnam and French deals, there could be major deals signed when it comes to the energy power grid. So it's about investment and shoring up ties, global leaders in this part of the world.
All right, Bloomberg's Avril Hong there in Kuala Lumpur. Well, we've got another big week for earnings coming up in China. Meituan and Xiaomi are set to report, which together will give a pulse check on the local tech sector. Bloomberg's Annabelle Drillers joins us now from Hong Kong. So, Belle, what are we expecting?
Yeah, well, Paul, it's still that big focus on what are the long-term plans of these businesses. So we can start with Xiaomi because we're fresh off that investment unveiling last week because we had Lei Jun in a live stream event, really just giving us the sense of the direction of where the company is going to go from here. So you had, for instance, EVs that were unveiled, or the new SUV that they're going to be putting into production. There was the plans around the semiconductors because we know Xiaomi is going to be releasing or is ramping up production of its own smartphone processors. This essentially is what Apple has done, replacing Qualcomm chips in its devices with its own in-house ones. Xiaomi is now taking the same path. And then also big R&D because the company is planning to spend heavily over the coming 5 years as well. So the expectations going into these figures for Xiaomi are relatively high. I mean, the stock as well has had a really good run up this year, gains of more than 50%. But that'll be the focus for that business. Meituan as well, it's really on the international expansion efforts because It's going even more global. We've seen it into new markets, for instance, trialling in the Middle East, already in Hong Kong. Many people are familiar with Kita. But it is planning to spend $1 billion over the next 5 years to launch its food delivery service in Brazil. And that, again, part of that broader global expansion push. Interesting to note as well, do we get any sort of commentary that also speaks to the amount of competition within China? For instance, JD.com is really ramping up its own food delivery business or unit, and our Bloomberg intelligence team is saying that actually could put quite a bit of margin pressure on Meituan that has been improving its operating margin for 4 straight years through 2025. Will we see it again this week?
You also had a chance to hear from the Alibaba co-founder Joe Tsai over the weekend. What did we get from that?
Yeah, that's right. So this was the closing ceremony of the Beyond Macau Expo, or Beyond Expo in Macau, taking place over the last few days. But Joe Tsai was very much a great concluding speaker and really giving some insights into how the business is really grappling with these rising tensions between the US and China. Of course, Alibaba, it's a company that's mostly exposed to the Chinese market, less exposed to external pressures, but at the same time giving some advice on what Asian businesses can do, because he did say that they should be looking for growth opportunities, not just within Asia, but also looking to other regions. And Europe was one he signalled out in particular. He did also call out some governments. He didn't say exactly which governments, but he did say some governments are trying to tear down the bridge that were built between Asia and the rest of the world. So that was his views on that. Also spoke about how the business turnaround efforts are going, but you can hear what he said. Take a listen.
We made some changes to the organization, and now I think we're on a very good path looking forward as we focus on a couple of core businesses. One is e-commerce, right? We say we're in the e-commerce business, and the other one is cloud computing. And then we also said that we want to make sure that AI is everywhere, in every aspect of our business.
So that's, we know, Alibaba has got some of the most ambitious plans in AI, because they're actually saying AGI, or artificial general intelligence, is the primary goal or objective for the business as well.
Haidi Jewelers there. More ahead on the Asia trade. This is Bloomberg. Markets in Japan to open at the top of the next hour. This is how we're setting up at the start of this trading week. We're seeing a bit of weakness there when it comes to the yen, as the dollar extending some of that strength as President Trump extends that EU tariff deadline after the phone call with Ursula von der Leyen. Their Nikkei futures looking pretty weak at this point. We're down by about 1% there, really looking to sort of pull back from the 1% rally that we had in the Friday session. We're also watching, of course, some of these specific sector-specific stories, including what happens when it comes to US Steel and Nippon Steel with that presidential blessing, as well as that intention to reach a tariff deal between the US and Japan by the G7 in June. And that's coming from Japan's chief trade negotiator, signalling that the government there is aiming to get that clinched with Washington in time for that June meeting between President Trump and Prime Minister, Ishiba. Let's bring our economics and government reporter in Tokyo, Yoshiaki Nohara. So Yoshi, really great to have you with us. What's the latest when it comes to the state of US-Japan trade talks? Do we know much about progress? The intent is obviously there to try and get, the fundamentals of a deal by June.
Right. So the two sides appear to be really eager to get things done by the June summit of G7 in Canada, where the President Trump and Prime Minister Ishiba are supposed to meet. But as you mentioned, that there's nothing really specifics mentioned about levels of tariffs they appear to be agreeing to, but at least they're really keen on getting things done by June.
Well, President Trump also stunned the market and surprised us all, really, when he announced his approval for a partnership between Nippon Steel and US Steel. Let's take a listen to what he had to say earlier.
It'll be controlled by the United States. Otherwise, I wouldn't make the deal. I went to the unions, to all of the local unions. They all wanted it. And I'm doing it because all of the congressmen came in, about 5 of them, and the others, I understand, are in concurrence, and they ask that I do it. Everybody seems to want it.
So are there any implications here for broader tariff negotiations?
Well, so it's a positive development from Japan's standpoint, because Japan has been trying to pitch itself as the biggest investor in the U.S. But the key point here is that the details are still sketchy, and none of the officials have mentioned that whether this deal, the partnership, is going to have a specific impact on the trade negotiations.
All right, Bloomberg economics and government reporter Yoshiaki Nahara there. Well, let's get to our next guest, Kurt Tong, managing partner at strategic advisory firm the Asia Group, and he previously served as a US diplomat, helping set the stage for Japan's entry into the Trans-Pacific Partnership. Kurt, thanks so much for joining us today. Just want to pick up on the remarks that Yoshiaki was making there regards the US Steel, Nippon Steel deal. Look, details are scant, a little bit confusing here, but at least can we say that this is a good omen ahead of US-Japan talks?
It certainly establishes positive momentum going into this next month of negotiations. It's also a very interesting signal that the Japan side is thinking of trying to finish earlier rather than later. As you know, there's an election coming up later in July, and the Japanese government really needs to have a positive outcome in this negotiation to set up for that election, or punt the entire negotiation until after the election. So I actually think this is very, very positive news for the atmosphere of the negotiations, for the level of trust between the two sides. But it still comes down to a game of chicken over the automobiles tariffs.
Mm-hmm. And perhaps currency as well plays a factor here as well. We heard from the finance minister and Scott Bessent last week saying, look, let's let the market handle the currency. But is the yen just always there in the background?
I think it's in the background, and the Japan side, interestingly, has waved that flag a bit as well to remind the United States that it's a mutually beneficial and potentially mutually destructive relationship in the financial markets. At the negotiating table, I believe the two sides have just, as they've indicated, pretty much decided to set that aside as a negotiation item.
Okay. Negotiations for the TPP feels like, millennials ago, right? But that was so much concentrated on the minutiae of trade clauses. What kind of deal do you think do we end up getting? Is it sort of more on the vibe, as we've seen with some of the other trade deals that have been, tentatively agreed between the US and its trading partners? Do you expect a fair degree of, actual substantive detail?
I think there will be some substance on trade barrier reduction, and agriculture has been mentioned as a clear point of contention. There are some non-tariff barriers around automobiles which could be eased. The main thrust of it, however, is how much is Japan going to jump in and help Donald Trump reindustrialize the United States. And he has specific asks on shipbuilding and on the energy infrastructure, particularly Alaska gas, that Japan is considering, but these are big, risky projects, very high ticket, extraordinarily risky. And so how they could participate in these sort of things, I think, is another really important topic of discussion.
Some of those sectors are also quite domestically sensitive, right? How much, we've seen kind of the success story for Xi Jinping, for example, in holding that strong line. Does Japan and the government there need to do that to a certain extent, or risk domestic, further diminishing popularity?
I think that's right. Well, they're going to make clear to the U.S. side, we can do this, we can't do that, and then hope to use the timeline to their advantage in convincing the United States, well, okay, that's good enough, we do want to reach a deal, we do want to move on, we don't want to have to raise retaliatory tariffs again. So the deadline's, in a sense, starting to work in Japan's favor. But again, I want to emphasize the crucial importance of the automobiles tariff. It's 25% tariff could have a devastating impact on some Japanese companies if it's allowed to drag on for a long time.
Let's talk more broadly about some of these other trade deals that are going on, because the US is trying to negotiate dozens within a 90-day period. I mean, normally free trade agreements take years to reach agreement on. Does this suggest to you that some of what's being achieved here is cosmetic for domestic political purposes? And can some of these wins endure beyond the Trump presidency?
This process has been excruciating for all of the partners working with the United States. That said, there will be some substantive outcomes which are mutually beneficial, some which are just complete concessions to the United States in order to get the deal done, and a lot of cosmetics. A lot of cosmetics will also go into this, because the U.S. side has now discovered that the tariffs can be a problem for the United States as much as for the counterpart. And that leverage reduction that is implicit when the president walked back a week after Liberation Day does really change the dynamic of the situation.
If you were advising some of these other countries in their negotiations with the U.S., what would you be saying?
Choose a few really interesting things, sell them to Donald Trump, dress them up a little bit if necessary, but they do need to be substantive at the same time, and then be consistent and sell them over and over again until you get across the finish line.
The big focus is still on whether the détente with China can be sustained, right? How do you feel about that?
So détente's a great word for it. They have agreed to talk. There's no agenda. There's no timeline. And both sides have reserved the right and are already exercising the right to continue to take action against one another on other issues, technology controls, export controls, the Section 232 tariff investigations. So what I expect is that this truce on the big tariffs will hold. The negotiations will take a long time, and it'll be a very bumpy ride with lots of ups and downs, action, counteraction, angry words, stretching all the way to and past the first meeting of the leaders, which I would anticipate taking place in the fall. I see two real milestones on this. One is the meeting of President Trump and Mr. Xi. The other is the midterm election, where I think by the midterm election, President Trump needs to demonstrate that all of this effort that he's put into leveraging the size of the U.S. economy has paid off, because the American public is starting to get skeptical about how this tariff strategy is working for them.
We've talked a lot about the stickiness of tariffs and whether, there are views that, obviously the previous Trump administration policies, some which are still in place, but do you also look at the stickiness of what, say, Beijing is trying to do with its outreach in terms of building those economic and soft and, harder power alliances? Do you think that's going to be something that extends beyond this administration?
Absolutely. I mean, this is a long-term strategy for China now. The Belt and Road was a piece of it. That's now been refined, made less transactional, if you will, less focused on China's needs, and there's more discussion about trade agreements, about softer forms of investment and economic interaction, more digital, less infrastructure. And I would expect China to really continue to push that. And they have a bit of a tailwind right now because of the distrust that's been engendered by the U.S. tariff approach. That may be temporary, may last a little while, but I expect China to continue this effort to make friends and try to rally them against the United States for years to come. That latter part is harder because they don't want to burn bridges with the United States either.
Can you see a scenario in which China joins the CPTPP?
I think that it's not inconceivable. A couple of years ago, it was close to inconceivable. I think Australia has a major vote in this. Japan has a very strong opinion about it, holding the content of the TPP and keeping it high level, penetrating liberalization. China is not yet ready to make the compromises necessary to meet those standards, but it's not inconceivable, especially as the Chinese economy grows slower. In future years, that they'll be more willing to revisit economic reforms that would qualify them for TPP. As an American citizen, I hope that the U.S. gets its act together first and makes it in before that happens.
Trump has a very unconventional approach when it comes to trade, right? He's not interested in looking at, revisiting FTAs and multilateral, bilateral agreements. Does that make the structure of these agreements less relevant in sort of today's political atmosphere?
It makes their outcomes less lasting. I think that in the short term, they're highly relevant. For example, the Nippon Steel deal that you mentioned at the outset, very significant, very positive realignment of the rhetoric around U.S.-Japan economic relations. But that's one episode. it'll be good for the relationship for a couple months. But the structures are really important over time, and that unwillingness to commit the United States to lasting structures in the economic realm is a problem for the U.S. On the defense side, I think the U.S. is still very much there, but the economic policy side, it's been absent from the table for, over 8 years now.
Really great to have you with us, and great to see you here in Sydney. Tong, who's a managing partner at the Asia Group here, and we do have more ahead on the Asia trade. This is Bloomberg. Let's take a look at some of the stocks we're watching when trade opens in Australia, Japan and Korea shortly. We're just a few minutes away now from the cash open. Of course, Nippon Steel is one of our top stories after President Trump announced a planned partnership between the company and US Steel. It's been following 17 months of to and fro negotiations. Also watching Samsung and Apple suppliers in the region as well. Trump threatening tariffs on device makers to encourage them to move manufacturing to the US, Paul.
Let's take a look at how commodities are tracking, seeing a modest increase in oil prices at the moment, and this is after President Trump agreed to extend the deadline to sorting out a trade agreement with the EU to July the 9th. That notwithstanding, we are expecting OPEC Plus to boost production for July. Market opens in Sydney, Seoul and Tokyo next. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens, and of course geopolitics and trade back into the fray, right, Paul, when it comes to this extension with the EU. That's going to give a little bit of breathing space, but of course it also adds to a bit more uncertainty.
Yeah, I mean, we've got a delay, July the 9th, so we'll see what happens. Ursula von der Leyen welcoming that, but we've also got this US Steel, Nippon Steel deal. We know something could happen, but exactly what? We're still trying to figure that out.
We are calling it a presidential blessing, right, after 17 months of negotiations and to and fro and uncertainty. So we'll be watching Nippon Steel, particularly as President Trump has said it will, add $14 billion to the US economy, 70,000 US jobs. Not a great deal of detail on how they're going to get there, but very interesting, particularly as there has been signalling that they want to get that US-Japan trade deal done by June, by the time the G7 rolls around as well. The Nikkei 225, a little bit of upside there, about 0.1%, extending on the gains that we saw in the Friday session. Modest gains in the first minute of trade for the topics there as well. We're watching dollar yen. The yen has been a little bit on the back foot this morning, as we've seen the US dollar seeing a bit more of an extension of strength following the trade headlines that we've been watching as well. Also watching JGBs, watching bond yields more broadly, given that we've seen yields last week continuing to catapult on a lot of this trade uncertainty. Let's take a look at the cost bid, because the Bank of Korea decision is one of two major rate decisions we're watching in the region. The other one, of course, is the RBNZ, closer to home, but the cost bid seeing a little bit of upside, about 0.25% there. We are expecting the BOK to potentially go for that sort of protective easing measure, if you will, with a cut this week, given that there are not just sort of external trade related headwinds, but also some of those concerns over the domestic situation, the political situation, and worries over domestic demand as well, Paul.
Well, let's take a look at what's happening here in Australia. Of course, the staggered open, but we've got a little bit of positivity in the early going. The sun's shining here in Sydney too. It certainly wasn't last week. We had biblical rain. Australian insurers have declared a significant event. There are up to 10,000 properties affected here in north of us here in Sydney. 5 people were killed in that flooding. 1,600 claims received by insurers so far in Australia, so we'll see how that pans out. The Aussie dollar's just cracked 65 cents. Meanwhile, we're seeing ongoing US dollar weakness. The dollar spot index dropping to its weakest since 2023. But the Aussie, Kiwi, offshore yuan all hovering around 6-month highs. Not going to be any trading in bonds today, but bonds futures are trading. This is due to the US public holiday. Yields have been rising, of course, on the long end, but the US Treasury Secretary Scott Bessent telling Wall Street Week he's not concerned. He says recent Treasury data shows foreign accounts are stepping up purchases at US auctions. The oil price also ticking a little little bit higher as well, off the back of that, well, potentially good news between the US and EU as they try to work out their trade differences.
Recent rise, poor in 30-year US Treasury yields is posing a challenge to a number of trader portfolios, but specifically the classic 60-40 portfolio strategy is coming into doubt. Investors perceiving more risk in long-term US debt. Let's get more from Chris Weston, who's a head of research at Pepperstone Group. It's not even just on the long end, is there? There's just sort of volatility across the entire curve. Is this going to be an ongoing sort of trend going forward because there is just that much volatility around trade, around government policy domestically, and thus around what the inflation and Fed outlook is going to be?
Yeah, I think the market's really trying to find a fair value, and that's really difficult because obviously you've seen the passing through the House of the big, beautiful tax bill, and yeah, we're trying to model exactly what that's going to mean for the fiscal impulse in the next couple of years across to 2035, how that's going to sort of lead into inflation. Inflation expectations, if you look at 1 and 2 year swaps, have been rising. They're settling down a little bit now, whilst the long-term inflation expectations are pretty well anchored around 240. But yeah, there's a lot of assumptions that need to be made. You know, how much tariffs are we going to be collecting? You know, or the US going to be collecting? And that's still very much a moving target. What's the level of interest rate that the US government are going to have to pay, lenders essentially to that situation? That's going to have huge implications on the tax burden. Yeah, people are looking at the interest expenses on US debt over the next decade and saying, on current yields, we could be looking at something like well over 5% of GDP in terms of just purely interest expenses, let alone what we're seeing from the primary deficit. So there's just a lot of moving targets that make forecasting and making those assumptions very, very difficult to do. I think the idea here is that we are looking at the long end more prominently because I think we've been dealt with, we saw a poor 20-year bond auction both in Japan and the US last week. And again, that poor demand, the long tail we saw just led to the belief that there was just not many buyers in the market at the moment. So the auctions we're going to see this week are not really centred on the long end. There's 2s, 5s and 7s, which is not going to give us huge clarity about that long end demand and obviously the rise in term premium. But yeah, as I say, everyone's trying to make these extrapolations about fiscal, about growth, about inflation, and ultimately what this means for the level of coupon issuance that we're going to see going forward and what that means for yields going forward. So it's going to continue to see high volatility because we just with that idea about clarity and being able to price risk in the bond market is still pretty low.
Are you sort of like taking longer positions at this point, given a little bit of the de-escalation of risks that we've had with the trade détente and such, or are you still trying to stay pretty vigilant?
Got to be nimble. You've got to be vigilant. Absolutely. I mean, I think the market had shown a decreased sensitivity towards tariff headlines, and I think when we got the news on Friday about the 1st of June deadline, people were saying, well, is this a resurface of the tariff shocks? Probably not. We've got a good idea that, on the 1st of June, those tariffs, probably 50% would have kicked in, but it won't kick in for very long. It won't stay that way because either the markets are going to force something on Trump or secondly, there will be a deal made, but the 50% tariffs wouldn't last for too long. Now, of course, we've got the idea today that deadline has been pushed back a little bit. So we've still got to stay nimble in this market. We've got to stay. We're in a bit of a holding pattern, trying to wait for some, for tariff news to be implemented, and we go past the 9th of July deadlines as well, and that will give us an idea about how this when we get a sustainable sort of tariff rate, that could give us a much clearer idea about what the Fed has to do, about what economics are going to be doing. It needs to obviously pass through there, and we've got the X date coming through later as well. So this is still a moving target, and the market at the moment is grappling with the Treasury Department and Trump, who have just changed from fiscal conservatism to outright pro-growth. And so I think in this market, for me, the most important thing is what the market's telling me. It's the only opinion that matters is the price. And right now, we've seen the S&P futures trade down to the 200-day moving average. I think we're seeing a big rebound from there. Is that sustainable? Could we see a higher high through the recent consolidation highs? Perhaps. Obviously, that's going to be down to NVIDIA. And I think if we were to see the bond auctions coming through this week, well bid and showing signs of improved demand, especially from foreign entities, that could settle things down at the long end. And if long end yields are falling for the right reasons, they're not falling because of negative growth aspects, but because people are seeing higher demand and bids returning at these levels, then I think the S&P can push higher. But we've got to keep an open mind about what's going on, and of course that just means following the price. That's at least for short-term traders anyway.
Chris, it's not just the US that's seeing yields rising on the long end. It's a number of countries, including Japan as well. And Japan's got its own set of unique problems. Can you see a scenario where the Bank of Japan needs to step into the bond market again?
Well, I haven't been checking out the liquidity conditions in the JGB market, certainly on the long end, because obviously if we were to see, really poor liquidity conditions, which exacerbates movement, then I think they'll have to step in some sort of capacity to calm that. It has been on the ultra long end, and the Japanese bank, the Treasury Department this week will be issuing, I think, 500 billion yen of 40-year paper this week. So given the really poor demand that we saw last week for the 20-year, well, obviously we're going to keep an eye on the ultra long end there. So if we see another poor one, then we obviously could feasibly see high volatility again manifest in that market. They may have to do something to calm liquidity conditions or improve liquidity conditions. But I think, I don't think the Bank of Japan are going to be doing anything on rates because of what they're doing. But there could be some modest operations around the fact that they've been pulling back on QT on QE so rapidly, and they may look to increase or halt that program for a short period of time. But it hasn't really manifested and spilt over into other asset classes. Obviously, I think you can say that it may be impacting the Treasury market just through sympathy, and the UK gilt market as well. They all tend to sort of be somewhat correlated in that regard. But it hasn't really influenced the Japanese yen. We haven't seen huge ramifications in the Nikkei or the topics. Maybe that would be the case if they were to, if there was a genuine belief they've lost the bond market and sort of setting up for something else. But again, I mean, what we're seeing at the moment in the bond market in the ultra long end is really focused on those countries that are running, sizable current account deficits, don't really have a major plan, in fact, are adding to the fiscal woes. And in the case of the US, I think they need to obviously the big consensus position that's brewing now is the fact they're going to have to use the US dollar to try and close that deficit. But right now, it's those countries with big deficits and no coherent plan that the bond market's looking at very closely.
All right, Chris Weston, Head of Research at Pepperstone Group. Thanks, as always, for joining us. Let's take a look at Nippon Steel, who's trading in Japan. We're seeing some pretty decent upside there to the tune of just under 6%. But a lot of questions remain. Nippon Steel, US Steel, is it a partnership? That's what President Trump says, a planned partnership. Or is it a takeover? Nobody's saying that. But, of course, Nippon Steel did propose a $14.1 billion cash takeover of US Steel. So the details of this are hazy, to say the least, although President Trump saying it's going to create at least 70,000 jobs and that US Steel is going to remain American. Well, the market for now likes this news, regardless of what the facts are, Heidi.
Yeah, I don't know if the markets are going to like the news when it comes to these sort of continued threats on tariffs against the EU, not just the EU, but of course smartphone makers and their suppliers as well, right? Unless that manufacturing is moved back to the US, which is something that our analysts here at Bloomberg have looked into, and just the sort of scant chance that there is that iPhones can be profitably made in the US. So we are seeing Samsung Electronics off by just about 0.2% there, as well as some of these sort of component manufacturers that we follow here in Asia seeing a little bit of downside. SK Hynix off by 1.3%. In that social media post on Friday morning, that threat against Apple would also apply to devices from Samsung as well, anyone that makes that product, because otherwise it wouldn't be fair, according to President Trump. More ahead on the Asia trade. This is Bloomberg.
Call, and I agreed to move it. I believe June 9th would be, July 9th would be the date. That was the date she requested. Could we move it from June 1st to July 9th? And I agreed to do that. And that she said we will rapidly get together and see if we can work something out.
President Trump extending the deadline for 50% tariffs on the EU to July 9 after a phone call with EU Commission President Ursula von der Leyen. For more, let's bring in Bloomberg editor John Herskowitz. So, John, von der Leyen describing that as a very good phone call. What are some of the factors here driving this trade dispute between Trump and the EU, and are we close to seeing a resolution?
Well, the resolution is a difficult thing to say, but some of the things that are driving it are the U.S. view of non-trade barriers being obstacles. The U.S. sees the EU as slow-walking negotiations. They see the EU as unfairly targeting U.S. companies, and they just don't see the EU as taking on some of these factors which are of importance to the U.S. From the EU's perspective, they're still trying to figure out what the Trump team is looking for. Negotiators who have on the EU side have spoken to Bloomberg say that the EU is ready to reduce tariffs to almost zero for most products. So it's just, there's a disconnect going on here. The two sides are looking at different things, and a resolution, it just seems it's going to be difficult at this point.
And just the level of volatility, right? Because we had the reiteration of the threat on Friday and now the extension of that deadline. Is there any indication that, you know, during the course of this extended deadline, we're going to see the parties come closer together?
I'm sure both sides are looking for it because the EU as a bloc is an enormous trade group. The U.S. is the world's top economy. And we have this back and forth that's going on. This deadline that's been extended until July. Whether we're going to see them coming together is another matter. But the EU, like China, has put in some retaliatory measures. China's a little bit of a different nature. But the EU also has lined up things that it could do in retaliation, taking a bit more of a hardball position than some of the other trade partners of the U.S. that are in negotiations, like Japan and South Korea. So the EU is open to a wide array of sectors for talks, much lower levels for many different products. But the Trump administration is looking at things which may not be as specific as what the EU is intending in terms of products and negotiations.
In terms of specifics, John, or lack thereof, let's talk a little bit about this threat from President Trump to impose tariffs against smartphone makers, Samsung and Apple. A lot of vexed questions here around timing of reshoring supply chains, diversified supply chains, the potential impact on consumers. Can you unpack some of this for us?
Yeah, I mean, the basic thing is that Trump is looking to get smartphone manufacturing into the U.S. For these makers, Apple, Samsung, most of their manufacturing goes on in Asia. They have an intricate array of suppliers that bring these phones together, the workers that can do it, and bringing the plants to the United States presents enormous challenges for these two firms. Apple has also drawn the ire of Trump for moving some of its manufacturing from China to India. For Samsung, they may see themselves in a really difficult position, and Samsung has invested heavily in semiconductor manufacturing at plants in Texas. It's been tens of billions of dollars over the past few years, and now the idea of bringing cell phone manufacturing to the United States. I'm just trying to figure out what Samsung is thinking, what to make of all of this. So it's more pressure on these companies. But moving the facilities to the U.S. to make these phones, it's an enormous array of problems and costs for these two firms, something that can't be done quickly, but that's what Trump appears to be wanting them to do, to make the commitment to manufacture these phones in the U.S.
Well, we've at least got sort of a rough deadline of a US-Japan deal by the G7 by the time that rolls around in June. Yeah. We've also got sort of a presidential approval when it comes to Nippon Steel. What do you make of those developments?
Japan was one of the first countries in negotiations with the U.S. for a deal, and Japan is looking for something quite comprehensive. Its auto sector was hit by the sectoral tariffs of 25%. Its steel makers as well in sectoral tariffs. And it's been pressing hard to get some sort of really comprehensive deal. But there's some things that the Trump administration has been talking about, like non-trade barriers on U.S. cars in Japan. The levies for U.S. cars in Japan are zero, but there isn't a lot of demand for them. So there really isn't much that Japan could do to bring in more cars. But Japan manufacturers see the U.S. as acting unfairly against the interests of Japanese automakers, many of whom have invested tens of billions of dollars in plants in various parts of the United States that are making cars and employing thousands of Americans. So Japan is looking for a deal by the G7. Whether one can be had that's comprehensive is another matter. If it's like the UK, it may just be a broad brush agreement.
Bloomberg News editor John Herskovitz, and clearly trade is front and centre as we see European futures opening up this morning for trading. This is the picture. We're seeing that rise when it comes to not just the trade hopes, the extension of that deadline, but also earnings hopes there as well. We did see a decline in European stocks on Friday after the initial threat of the 50% tariff on the EU starting on June 1st, but of course that has turned around. It's interesting, NAB in its strategic note saying that this is perhaps showing the news of the pattern of Trump threats followed by a retreat again. We're seeing Euro Stoxx 50 futures, German DAX futures all up by about 1.5% or higher. Also seeing a little bit of upside in the euro with the USD really quoted pretty mixed at the start of the early session. A little bit of benefit for some of those risk-sensitive currencies today as well in Asia, Paul.
Well, let's get to some other stories that we're following. Russia and Ukraine have completed a third day of prisoner exchanges, and that's despite a barrage of Russian airstrikes that killed 12 people. 1,000 prisoners have been transferred between both countries, but Russian attacks on Ukraine have also intensified following direct talks in Istanbul earlier this month. President Trump has expressed frustration with Vladimir Putin and says he is absolutely considering new sanctions against Russia.
Absolutely. He's killing a lot of people. I don't know what's wrong with him. What the hell happened to him, right? He's killing a lot of people. I'm not happy about that.
The EU is said to be considering cutting more than 20 banks from SWIFT, the international payment system, as part of fresh sanctions to raise the pressure on Russia. The new package may include lowering a price cap on Russian oil and banning the Nord Stream gas pipelines. Sources say the European Commission is consulting member states over the plans. Israel's military aims to take over 75% of the Gaza Strip within 2 months, according to local media accounts of a military briefing. The offensive aims to defeat Hamas or force the exile of its leadership and press the group to release the last of its hostages taken 2 years ago. Under the plan, the entire population of some 2 million people will be forced into 3 areas, making up just a quarter of the territory. More ahead on the Asia trade. This is Bloomberg. US Treasury Secretary Scott Bessent expects several large trade deals to be announced in the coming weeks and for more in-person talks with China. Bessent spoke with Bloomberg about the impact of revenue from tariffs and why talks with the EU are proving more difficult.
We have substantial revenue coming in now, and there is, at some point, there's an equilibrium rate, what's called a Laffer curve for tariffs. And I think we will reach that rate. The other thing that's happening is a lot of their tariff barriers or non-tariff trade barriers. A lot of these non-tariff trade barriers are coming down, so friction's decreasing there. And again, because we don't know where these tariff negotiations are going to end up, they won't end up being scored. But it's several $100 million a year, several $100 billion a year of revenue that will be used for every 100 billion, that's 100 billion less of bonds that Treasury has to issue.
When you talk about uncertainty and getting more certainty because of the tax bill, some of the uncertainty, a lot of it is because of tariffs right now, because we're not exactly sure where we're going to end up. Do you have a sense when the economic community, the business community, will get better certainty on tariffs?
Well, we've done the 90-day pause. As I mentioned several times, we have 18 important trading partners. So what everyone should really focus on are those. We've done a deal with the UK. My sense is over the next couple of weeks, we're going to have several large deals announced. We have put a pause and a 90-day pause with China. I expect that we will be negotiating in person with them again. And then the president today, when we initiated the pause and the 10% are moving down from the April 2nd rate to the 10% level was contingent on countries or trading blocs coming and negotiating in good faith. And I think the president was getting frustrated with the EU. You know, the problem with the EU, I've said several times, they have a collective action problem. There are 27 countries. They all have different needs. The Germans, they are interested in cars, the French in agriculture. So, and then you have Brussels negotiating with them.
US Treasury Secretary Scott Bessent there speaking with our colleague David Weston. Watching Japan bonds at the moment, we're seeing bonds as well as bond deals just taking a hit as we see a little bit more risk on with the trade deal extension there. 30, 40-year bond deals both falling in Japan. Another big week ahead when it comes to earnings in China. Meituan and Xiaomi are set to report, which together will give a pretty good pulse check on the local tech sector. Admiral Julius joins us now from Hong Kong. So, Belle, what are we watching out for?
Xiaomi, of course, because we had the founder and chairman Lei Jun unveiling some really ambitious plans last week. So you've got a new SUV, for instance, that's going to be into production. They've also unveiled a new smartphone processor that, again, is ramping up and really doing what Apple has done by replacing Qualcomm processors within their devices. And then as well, the company laid out some very ambitious R&D plans for the 5 years ahead. So the expectations on Xiaomi going into these numbers, as I said, it's going to be pretty high. The other stock we're going to be watching is Meituan, the food delivery business. Their big push right now is the international expansion. So we've seen it already into the Middle East, trials there. They're very prominent now in Hong Kong, for instance, with Kita. But they're also planning to spend $1 billion over the next 5 years to launch Meituan in Brazil. And so how they're going with that is going to be something to note. Also how they're dealing with domestic pressures at home, because they're facing off the likes of Alibaba, but JD.com, for instance, really investing heavily into their food delivery business. And the concern that our Bloomberg intelligence team is pointing to is that it could actually end up hurting Meituan's margins as it attempts to essentially fend off these rivals.
Yeah, on the subject of margins, could we see some Chinese tech giants coming under pressure today?
Yeah, this is going to be one to watch very closely. So it's news that happened over the weekend, but just to start off with the stock moves we'll be expecting. So essentially companies that are connected to the platform economy within China, so names like Alibaba, Meituan, JD.com, these all could drop possibly throughout the session today. The story is essentially China's State Administration for Market Regulation has published draft guidelines for fees that online platforms charge to third-party merchants. So essentially what they want is names like Alibaba, JD.com, Meituan. They want the merchants that are on their sites to have reasonable fees that they pay, and they also don't want Chinese regulators unreasonable policies for these merchants as well, because there's been a lot of criticism essentially of these major companies that offer very attractive policies to consumers, like free returns, for instance. That is actually what ends up hurting the merchants, not the platform companies themselves.
When it comes to the conversation with Alibaba co-founder Tsai over the weekend, what did we hear?
This was, this was the closing ceremony of the Beyond Expo in Macau that just wrapped on Saturday. And it was a chance really to hear from Tsai, the Alibaba co-founder, chairman, how he's grappling with lots of different factors. I mean, chief among those, of course, is US-China tensions, but also other things like the turnaround efforts of the business. And he spoke about this, saying essentially he thinks that Alibaba is on a very good path moving forward. They're really focusing on AI in particular and also their core e-commerce business. But yes, essentially how companies in Asia can face off with rising tensions, particularly between US and China. Here's what he said.
People have benefited from free trade, right? It was until recently some governments try to tear down this bridge that we have built between Asia and the rest of the world. If you look at China's trade with the rest of Southeast Asia, it's already as big as its trade with the United States. I think there's actually a lot of inter-Asia business activity engagement that can happen among the East Asian countries, between East Asia and Southeast Asia, and eventually South Asia as well.
Alibaba as a business, it's mostly exposed to the domestic economy, but they still do have their international arm as well. And the way that it's really being impacted by rising trade tensions comes down to the de minimis exemption or the end of that. But essentially, this is closing the tariff loophole for small parcels from mainland China and Hong Kong. And that's where perhaps Alibaba is most bearing the brunt.
All right, our tech reporter Annabelle Jewell is there in Hong Kong. Let's take a closer look now at how the 90-day reprieve on tariffs between the US and China could impact the tech sector. Joining us now is Nicolas Gaudois, head of APAC technology at UBS. Nicolas, thanks so much for joining us. We just heard from the Alibaba chair there talking about how China is engaging with the rest of Asia at a size of the US market. Are we seeing a decoupling underway here, or is the US still just too important to China to ignore?
Yeah, thank you for the question. So the decoupling actually started earlier than that, and it actually has been more a function of export controls for critical manufacturing technologies for semiconductors in particular. And that has effectively led China to reinforce the localization of its ecosystem for semis since then. The tariffs itself doesn't necessarily have a direct impact for end demand for many Chinese OEMs, because actually the exposure to the US market is quite limited. However, it obviously could have a direct impact for all of the assembly activity you have in China for smartphone and for PCs in particular.
So how are you seeing this trade tension impacting innovation in the Asian tech space?
So really has two completely different effects. On one hand, very clearly, free flow of products, free flow of people, of engineers, also of undergrads going for postgrads in the US from Asia, China in particular, has been very, very positive for innovation. And that flow has slowed down, in particular because a lot of graduates here in Asia who were considering doing postgrads in the US also worried about the ability to stay and work there. Now, if you look at Silicon Valley companies, a lot of management actually originally were born in Asia and then educated or worked in the US. So that itself is negative both ways. It has been negative for some years now. On the other hand, because of this bifurcation, China in particular has been pretty much forced to turbocharge their investment efforts in R&D in critical areas, and also making the most of some of the key strength China has in tech, in particular in software. And that is actually quite apparent in what has been happening this year in AI in particular.
It's interesting because for the longest time, even with that turbocharged investment, even with that top-down directive, there were a lot of skepticism and doubt over whether China could ever catch up to the US. Do you think developments around things like DeepSeek have changed that perception?
The perception may be, but you have a point, which is at the end of the day, if you go back to enabling technologies, in particular semiconductors, there are also some hard truths. And the hard truths are, if you're limiting the access to specific technologies, for instance, EUV lithography for manufacturing of semiconductor devices, then it's still very challenging, not impossible, but very challenging for China to ramp up capabilities in leading-edge semis manufacturing for logic devices. Those logic devices could be the engines to obviously power AI software, train models, inference, etc., and also for memory. So really the two areas where localization is still very challenging. On the other hand, if you look at trailing-edge semiconductor technologies, actually localization has been happening faster, and in those segments are very important for power, for instance, for EV, for industrial applications. China has been making really strong progresses. As far as DeepSeek is concerned, I think it has illustrated how you could make good of a lot of innovating technologies and tools. They're not limited to China, but again, in some areas of AI, China has been a software leader for many years, and therefore has been able to deploy some of these capabilities faster, and certainly faster than expected by the non-China AI industry.
It's challenging sort of around the region too, right? Particularly now with these renewed threats over the likes of Samsung, Apple and their suppliers, given the threat of tariffs if they don't move that production into the US. How does this fight end? Because certainly internally at Bloomberg, we've looked at the numbers and there's a very scant chance that that production can be moved into the US.
Right, absolutely. So you're going back, I guess, to what we just learned on Friday. If you were to apply a 25% tariff on smartphones not manufactured in the US, obviously none literally are manufactured in the US right now, and if you take, let's say, the latest generation iPhone average cost, the tariffs is basically applied on the cost, then basically that will add about $128 in terms of cost. In parallel, you know that the US under Section 232 is looking at adding tariffs as well for the use of semiconductors which are not originated in the US. Origination means front-end semiconductor manufacturing, so where the semiconductor fabs are located. So for instance, a Qualcomm chip manufactured in Taiwan at, say, TSMC will be originated in Taiwan, even if it's packaged in Malaysia by somebody else. So that could potentially add another tariff. Let's say you apply 25% to this, then all of a sudden your incremental cost is basically around $228 in total. So how would the industry absorb it? Possibly you'll see price increases. It's more likely that price increases actually happen globally in order to spread the blow, but also to avoid global arbitrage in buying a smartphone in one country or the other. So for the timing, there is not a lot the industry can actually do. If the question is about assembling smartphones in the US, that process is still very labor intensive, contrary, say, to assembling a car. And it requires a lot of precision and a skill set that obviously the China labor force, to a lesser extent India or Vietnam, have had for quite some time for electronics industry. So very challenging. If the issue is to basically trigger, like for the semis tariffs, or to push for reshoring of semiconductor manufacturing in the US, it is already happening anyway. You know that TSMC has announced another 5 fabs investments in Arizona for the next few years. It's not contingent upon the CHIPS Act per se. So it's not very clear we start to achieve anything incremental to that. But if tomorrow a smartphone manufacturer like Apple would decide to switch production of their processors from Taiwan to the US, actually right now it's not possible because the process technology is not the same. So in summary, not very clear what the political result of all that will basically be. And for the supply chain, we see uncertainty on demand in particular.
Nicolas, really great to have you with us. Nicolas Gaudois, who's the head of APAC Technology Research at UBS. And you don't want to miss out on the rest of our exclusive coverage of the UBS Asian Investment Conference later this week. We'll be joined by the bank's APAC President, Iqbal Khan, as well as their co-head of APAC Global Wealth Management, Amy Lowe. We'll also be speaking to a former Director General of the World Trade Organization and the former RBI Governor. More ahead on the Asia Trade. This is Bloomberg.
controlled by the United States. Otherwise, I wouldn't make the deal. I went to the unions, to all of the local unions. They all wanted it. And I'm doing it because all of the congressmen came in, about 5 of them, and the others, I understand, are in concurrence. And they asked that I do it. Everybody seems to want it.
President Trump on the deal between US Steel and Nippon Steel. Well, we'll take a look at Nippon Steel shares at the moment. This is what they're doing in the Japan trading session. We're about 45 minutes into the start of trading in Tokyo. A bit of upside there of about 5%. This, of course, comes after 17 months of to and fro negotiations. Let's bring in for some analysis Bloomberg's managing editor for commodities and energy in Asia, Clara Ferreira-Marquez. And Clara, you know, we've seen President Trump promise 70,000 US jobs, $14 billion being added to the US economy as a result, giving it his presidential blessing. Do we have any details on what this partnership potentially looks like, how it works?
Well, that's a very good question. So he has provided his blessing. That was the comment he made on Friday. What we're not clear on, excuse me, is what exactly he has blessed. What exactly has the president endorsed? And the comments that he made late Sunday in the US, the images that you just showed in New Jersey, they leave everything just as unclear. He talks about a partnership. He talks about a very significant Nippon Steel investment and 70,000 jobs. I mean, that's more than 5 times, roughly 5 times the US employees that US Steel currently has, just to give you a sense of scale. What we don't know is whether this actually means that the initial acquisition, the $14.1 billion cash acquisition by Nippon Steel, whether that has been approved.
Yeah, we heard from the president there saying also that the union wants this. Does the union actually have any more details on this that we don't know? And can you tell us a little bit more about how the management of both companies are responding?
So in terms of the union, again, it's pretty unclear. So the union have not supported the Nippon Steel acquisition. What they have supported is investment. So if this is a very significant investment by Nippon Steel, yes, perhaps that is a good thing. But let's be clear on how much Nippon Steel would have to inject into US Steel. These are outdated facilities. They may be constrained in terms of job losses, job cuts. So a very, very big cost for Nippon Steel, which then raises the question of why the shares are up so significantly today. That perhaps is people seeing through the current situation and into growth going forward. The two companies, to answer your question, have not provided a lot more detail. They've really stuck very closely to President Trump's vocabulary around partnerships and hailed what both sides called a very bold move. What they haven't specified is what exactly that move is.
Yeah, and I do wonder how difficult it's going to be for Nippon Steel to be able to justify, you know, whatever the details are. I assume at some point we'll get them to their shareholders, right? Particularly if it relates to some of the, you know, aging infrastructure that they'll have to keep.
I mean, that's absolutely right. This is billions and billions of dollars in a highly politicized environment. Very difficult to see any, quick returns for Nippon Steel here. But Nippon Steel does need growth, and the U.S. market, and as with the initial intention of the deal, the U.S. market does provide that. And for now, at least, that's what the market's looking at. But in terms of debt, in terms of investment, and in terms of walking into a political mess, absolutely, this will be a marathon, even assuming that the deal has been approved.
All right, Bloomberg's managing editor for commodities and energy in Asia, Clara Ferreira-Marquez there. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how commodity prices are tracking. We're seeing some modest increases in oil prices at the moment, and this is off the back of news that President Trump has agreed to extend the deadline for reaching a trade agreement with the EU until July the 9th. The European Commission President Ursula von der Leyen also saying that there was a very good call with President Trump. So that's supporting oil prices. But then on the other hand, OPEC Plus is seen as likely further boosting production in June and July. And according to the U.S. Energy Information Administration, gasoline demand in the U.S. is at a 5-year seasonal low. So a lot of these oversupply factors still very much alive and well, Heidi.
Take a look at the sort of impact that we're seeing across FX as well as some of the bond moves that we've seen, particularly when it comes to JGBs at the moment. Take a look at the yen. We're seeing some weakness there for the yen, just sort of pulling back as, of course, some of the risk appetite returns to this market with the extension of the EU trade deal there. We're seeing the yen just falling after that deadline, which pushed back. We are also seeing a move when it comes to 30 and 40-year bond yields falling in Japan by 7 basis points across that super long end of the curve amid this ongoing uncertainty around trade policies as well. You can see that sort of risk-averse buying coming back into the market. The euro seeing a pretty good start to trading this morning as we see that mixed bid on the dollar. Euro obviously a little bit of a relief rally there as we get that extension of the EU trade deal, regardless of the fact that potentially it sort of adds a little bit more uncertainty to that mix as well. We're also watching some of the risk sort of proxy currencies, the likes of the Aussie dollar. Some strategists have suggested, including the likes of NAB, that we're going to see a little bit more upside when it comes to sort of the China proxies like the Aussie dollar.
Rival Southeast Asian leaders are about to start 2 days of talks seeking to deepen ties with China and Gulf nations and mitigate the fallout from President Trump's tariffs. Bloomberg's Avril Hong is in Kuala Lumpur and joins us now. So, Avril, what's on the agenda?
Oh, there is plenty on the agenda. I mean, key among these issues that are going to be discussed is the global trading environment, these tariff uncertainties. Now, certainly, we're already seeing the Thai, the Malaysian delegation streaming in. Not so long ago, I saw the Thai Prime Minister speaking to the Malaysian Trade Minister. Just below me, we're seeing the Malaysian Prime Minister talking to members of the media and receiving state leaders. So just to paint a scene of what is underway this week. But the big event we're going to be watching is the ASEAN GCC China Summit. This is the first time that this trilateral summit will be taking place. These are fast-growing regions, and they're all looking to diversify at the time of heightened uncertainty. For ASEAN, it's not just about how these major powers are courting them, it's also about how these ASEAN economies can integrate even deeper into global supply chains, particularly when it comes to chips, and also to integrate with each other. Certainly, that was the point that the Thai foreign minister was making when I spoke to him yesterday. Have a listen.
One country cannot, finish the whole product. We have to share the advantage in, the manufacturing. So that means we share the opportunities for supply chain.
Now, when it comes to the chips ecosystem in this part of the world, we have the likes of Malaysia, for example. It's a big player when it comes to semiconductors, but it's still sitting quite low on the value chain. It's more involved in assembly and packaging. It wants to climb that and get more involved in design and fabrication, the higher end of the global chips value chain. In terms of the significance for China in these summits, it's really at a time when China has been building momentum on key infrastructure projects. Suddenly, we've seen Li Qian not just visiting Indonesia, he's going to be here as well, attending this summit. He'll be here until Wednesday, the Chinese Premier. And of course, this visit by the Chinese Premier comes not long after the Chinese President was making a visit to this part of the world, part of his charm offensive. So it really speaks to the significance of the Southeast Asian economies. And on top of that, when it comes to the GCC countries, they are courting new markets as well. That's part of the agenda. And of course, this is coming against the backdrop of oil market volatility, perhaps finding some hedges.
Yeah, we're not just like watching Li Qiang in Indonesia, but also Emmanuel Macron in Vietnam.
That's right. Emmanuel Macron, as part of his visit to this part of the world, is stopping by Vietnam. From here, he goes on to Indonesia as well as Singapore, where we'll be hearing from him at the Shangri-La Dialogue. Of course, that's the Defense Summit. And overall, this is seen as part of not just French, but perhaps EU efforts in the face of these tariff threats from Donald Trump. Yet more uncertainty, even though we're hearing about delays to court other regional blocs. think about ASEAN, right? So these 10 member nations, what can they cooperate with in terms of shoring up regional alliances? Now, we are hearing that when it comes to Macron and Vietnam, the focus for the visit is going to be about energy, transport, infrastructure. Suddenly, we're hearing about potentially some deals being signed in the way of energy power grid. So a lot to keep watch on in this part of the world. Heidi.
Bloomberg's April Hong is there in Kuala Lumpur with the latest. We'll be getting more on that throughout the course of the day. But in the meantime, that is it for the Asia trade. This is Bloomberg.